The financial sector is back big. Who cares and why does it matter? Well, one person does. It's David Wessel. He cares and he joins us now from Washington, D.C. David, tell us about the financial sector.
Well, we saw a period of time in the early 70s when we had an explosion of finance. Credit everywhere. It seemed like anybody could borrow. The financial sector was particularly active in leveraging itself up to make bigger bets. Then the crisis arrives, 2008, the bottom falls out of it, and we've been slowly growing our way back out of it. In my column this week, I talk about some data I got from the McKinsey consulting firm, their research arm, that shows that as a share of the world economy, the whole world economy, credit and equity markets are back to to 2000 levels. But I think the interesting question is how much finance is enough and how much is too much, and that's one we're going to be wrestling with for a long time.
So there's also good parts of finance and bad parts of finance. Explain, you sort of talk about that in your column. That interested me a lot. Tell us about it.
Well, what is the importance of finance in economy? What is the social value? It exists to take savers from people who have it, in countries that have it, and transfer it to people and businesses that have investments that will pay off in the future. So only about a quarter of the increase in all the global finance during the run-up to the crisis went to households and non-financial businesses. The rest went either to governments or to big finance, basically leveraging itself up. So I think the question is, you obviously need a financial sector because that's what they do. And they have to be rewarded for doing this transformation of taking short-term savings and turning into long-term investment. But I think that we had too much of that. And one of the really interesting things now is, can we build a new financial regulatory architecture, a scaffolding, if you will, that gives us enough of the finance so we can finance growth, but not so much that we replay the horrors of the mid-2000s.
And of course, right now, that sort of taking of savers' money and putting it to work is one of the things that some of the big banks have been criticized for, justly or unjustly. So that is pretty interesting. Where do you come down on this, David? I realize this is a tricky question, but let's put you on the spot.
Well, I don't think we're at the point yet where finance is too big. I think we're at the point now that there are some worrisome trends right now. They're the ones that Jeremy Stein at the Federal Reserve has been talking about. You know, when you start to see in the market takeovers that are financed by debt, and the debt is not paying cash interest but paying IOUs, that's a warning sign. So I think we haven't yet found a way to harness the power of finance. And so I am worried about those things building up. But there's definitely not enough credit in the world for small and medium-sized enterprises, for emerging markets. So it would be a shame if the current trend continues because we are really starving economic growth now.
Okay. Great stuff as always. Thank you very much, David Wessel.
You're welcome.
And you can read more on David's column on WSJ.com or in tomorrow's paper.